Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. Hope you all had a great New Year's. Happy New Year again to all of you. Wish your 2024 ends up being a great year. But let's start off the year talking about something very interesting that comes out from the Financial Times, talking about the private equity industry. Now remember last time when we spoke a year back and even before that, we talked about the private equity industry. We talked about shadow banking. We talked about how these areas may be at pose of something a little bit more at risk than, what's out there in the publicly traded markets, right? There's more risk in the private markets because a lot of them have money tied up with real estate, commercial real estate, for example. And these are assets that are not very easy to liquidate and sell very fast, when you compare to, let's say, a stock or a bond, which can, you can hit the buy or the sell button quite quickly. These are big assets that take time to liquidate and not, they're not fast like your typical stock or crypto, what have you, right? So this article talks about private equity firms, right? And what they're doing start of 2024, what they're expected to see in the coming years, and most importantly, how much money they are sitting on right now. So I'm going to start off. I'll put the link to this article in the description so you could read up on it. But I'm going to start off here. The first paragraph basically says the private equity industry has entered 2024 with record amounts of unspent investor cash, an unprecedented stockpile of aging deals that firms must sell in coming years. So a couple of things there. You got private equity firms, sitting on mountains of cash, and also on deals that they want to get rid of, right? Why do they want to get rid of it? Could it be that they see something coming down the road that they want to take an opportunity of, or that they're worried about? There might be some risks there, right? Let's read into this article a little bit more and see what they have to say. It says here, private equity firms were sitting on a record of $2.59 trillion in cash reserves available for buyouts and other investments as of December 15th, according to S&P Global Market Intelligence. All right, $2.59 trillion of cash reserves. That's a big chunk of money sitting there ready to deploy into some opportunities, right? Nearly a quarter of that cash was held by 25 of the industry's largest groups, including Apollo Global, Blackstone, KKR, CVC Capital, and so on. Industry executives and their advisors believe the new year presents a big test for private equity investors as they seek ways to sell down large investments while searching for new opportunities. With the market for IPOs still lukewarm, the global deal making slow, the number of private equity exit transactions last quarter was near a decade low, according to consultancy Bain & Co. That has left buyout groups with a record of $2.8 trillion in unsold investments and what Bain describes as a towering backlog of companies to exit. What we are seeing from private equity owners is a lot of anxiety because it's unclear how asset sales will evolve, right? So again, going through this article, seeing here already, right, the private equity industry is already starting to show more signs of uncertainty ahead, right? Especially on deals that they want to get rid of. The deal making is slowing down. The investment banking sector, the private equity sector is slowing down, which means what? Right? What have we seen in the past 2 years? Right? We saw a couple of these Blackstone funds come in and basically completely stop all withdrawals of money. Right? We heard about even certain pension funds in the UK that were about to go bust. Right? We heard about all these shadow banks, these private equity firms who were under a lot of stress because of the higher interest rates, right? Everyone was under a lot of stress because of the higher interest rates. Now, also, we heard, most importantly, a lot of these firms, like for example Blackstone, that have funds fully invested into commercial real estate, a lot of them have are still having trouble to try to get rid of them, right? Now, the thing is, when you look at the public markets, like for example the REITs, the real estate investment trust, the real estate stocks also on the exchange, you see that the market has discounted and kind of hammered some of these stocks early, just last year, and they're putting in their forecast or their expectation of what they think real estate will end up looking like in the value of the stock. That's why you see, many of those stocks are down 30%, right? Now, of course, with the news of potential rate cuts coming down, that has pushed the market somewhat higher, creating this optimism. But here's the thing. Rate cuts. Sure, it may be a good thing for the real estate market, may be a good thing for private equity firms and firms that are highly levered, but does it necessarily mean it's a good thing for the economy, for the markets as a whole, or does it simply mean something else? And when you look at all of this that's happening, you're starting to see even, firms like Blackstone are, sitting, these private equity firms sitting on about 2.59 trillion in excess cash reserves, also thinking about exiting as much of their companies that they can, basically saying that they want to throw the bag to someone else, right? They don't want to be left holding the bag for too long. They want to push it out to someone else, bring that cash, because more and more they're seeing a need to create an excess cash reserve for something down the road, which is something to buy up, because they see values eventually coming down and then moving up, right? And what does that coming down part look like? That we will know maybe this year, maybe early of 2025. But the expectation is that in 2024, you can expect that more and more investors are expecting that growth is going to slow down further, demand is going to slow down further. You can expect that if deal making, as mentioned in this article, is going to slow down, guess what? Layoffs will also start to increase. You're hearing around a lot of companies starting to lay off workers, starting to minimize their costs through the layoffs. And as data, when we get more and more macro data, and as that continues to weaken, you can expect more companies start to lay off more workers, which will push the unemployment rate higher and higher, right? And especially in the banking sector, especially in private equity, especially when you have these financial institutions, these shadow banks, who are all money minded, wanting to focus on the bottom line, and they can't really deviate from these big assets that they own, and they can't really exit that quickly. You can expect that they will look elsewhere to lower their costs, aka the firing of workers, right? Now the question is that, who is it, right? Which area, which bank is it? Which company is it? Blackstone that's going to have some sort of major crisis with some fund that is locked up, and there ends up being a very tremendous downturn that causes panic selling, that causes the value of some of their assets to drop significantly? I mean, I don't know. That's a very hard question to answer. Maybe it's not Blackstone. Maybe it's another company that causes, a domino effect in the economy globally that causes, $1 trillion or two or more to be wiped out, right? So we will see. We will assess the situation. But as we see it here, the private equity firms, having about 2 trillion, 2.5, 2.6 trillion dollars sitting on the side, just basically tells you that they're pretty sure they're waiting for something to happen to scoop up some opportunities down the road, right? And especially that they're not using it still right now. You would think, okay, you got this excess cash for 2024, why not start using it? They're actually saying here that they're also, while holding this cash on the side, they are looking to basically dump some of their investments as well. And there's uncertainty around it, right? So time will tell. Let me know what you guys think. Comment below, subscribe, hit the like button, bell icon to be notified on the next video. And I'll see you guys around. Cheers and bye.